Good morning, traders from Chicago. It's 8 a.m. Chicago time on Thursday, the 30th of September, 2021. Thanks for joining me. A quick mic check, if you will. Let me know how I'm coming across. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Today's episode is number 2084. Trying out something new today. There is Periscope is gone. Periscope is no longer supported by Twitter, and instead they have this thing called Media Studio from Twitter, and you have access to that. There should be a tweet out there linking the new broadcast, and it's a broadcast that you can catch on the go. Anyway, let's take a look at where the market stands this morning. We have a mixed posture coming into the session. Asia ended mixed. Europe ended a little bit lower or is trading a little bit lower. It hasn't ended yet, but the U.S. is seeing a pretty good run. In fact, the U.S. had a high in the S&P 500 that was 20 points, 25 points higher than where we are now. We've really pulled back and fallen across the mid and VWAP of the session. I'll cover that in a bit. The Dow, same, had a pretty good run, pushed all the way above 34,500, currently trading at 34,368. Big reversal in the last few hours. Nasdaq's the same. Nasdaq pushed a high of 14,883 half, and it's trading about 80 points lower currently. Russell's about the same. Pushed highs of about 2250, currently trading 2233, or up 50 basis points. The Euro stocks and the DAX are lower by about 30 basis points. Crude's coming off. We talked about this 2 days ago, that the run up in crude has gone quite a ways. It was starting to push or stretch. Statistical historical probabilities in terms of a swing run, and I talked about the high potential that we would see it turn over, and it hasn't come off that much. Crude has pushed through 75.60 or so, so it's about $2 lower. Still a problem for Europe. Crude and natural gas, big problems with energy supplies or energy availability in Europe. The metals are still sitting sideways, with silver kind of hovering around the $22 mark, which has been there for a while. Crypto's making a small recovery. Bitcoin has moved down to around 41,000, back to 43.4, and Ether was seen at about 2,700, upper 2,700s, back above the 3,000 mark. The S&P is enjoying a multi-distribution, in fact, a double distribution profile in the overnight session. Two balance zones in the overnight session. Essentially, what we see today in the ES is the same thing we saw yesterday at this time. Excuse me. At this time, volume's not as high as it was yesterday, 255,000. Overnight inventories 100% long, as it was the day before, 100% long, and the range is 33.75 points, with the point of control having moved to where it was yesterday at this time for the overnight point of control. So it's Groundhog Day. In other words, we're seeing the past repeat itself. Key earnings, Paychex, Bed Bath & Beyond, a big retailer, CarMax and McCormick reported, and then we're looking for Jefferies Financial after the close. Still dealing with the U.S. Fiscal deadlock, debt ceiling issue. There's a lot of politics. These idiots running the country. The debt ceiling's been raised every time it has come up, but we have to do this dog and pony circus show and tell everybody how the U.S. can default on its interest rate payments, on their debt payments, therefore bringing down the rating of the U.S. debt, and therefore interest rates are likely to spike higher, which would have knock-on effects to the overall economy as the cost of money becomes expensive and yada yada yada. But at the end of the day, it's political suicide to stand in the way, and that's what Mitch McConnell did the other day, or trying to do. And it's the same, pardon the term, it's the same shit every single time. These clowns cannot, whether Democrat or Republican, I could not care less about who the party is. I could not care less. All I'm interested in is what they're pushing and what their values are, and so on. So to me, whether you're Republican or Democrat, it doesn't matter. I'm not into the colors and the teams. I'm into governance, and what we have here is a dog and pony show. So this sits here, and it's going to be here for quite a while as we go into the end of the year. We do this every couple of years. The other concern, Democratic idiots. Oh yeah. There's the team building, the team siding, as if we all belong to some team. Anyway, I won't get into that this morning. China growth concerns continue. We still see the same kind of warnings or red flags coming out of China. The growth there is likely to be stunted, and this is a concern for the market. So yesterday was a huge whipsaw day. Back and forth. There are some cross currents, and expecting the same today. We still had a big sell-off day the other day, and we still have not continued that lower. We still haven't done the continuation move. Today, we do have the Chicago PMI number, which comes out at 9:42 Eastern to subscribers, 9:45 to the public. So if you're in a position that doesn't have enough cover, it is important to be aware that we're heading into the number at 9:42, and to cover your position in case the number's way off. The expectation for Chicago PMI today is 65. The consensus is 65. And then we have U.S. Feds, Williams, Bostic, and Harker, 10, 11, and 11:30. These guys are pretty much just talking heads at this point. We already have the dot plot for the rest of the year into 2022 and 23, and whatever they say isn't going to make a difference because the Fed has already declared its intentions. So whatever these guys say is not likely to move the market. So I wouldn't pay too much attention to what these guys are going to say. Okay, so that's the summary. Here's what was expected yesterday. The primary expectation yesterday was for us to pull back into or towards the settlement price of the prior session. A little wiggle there. The expectation was a little wiggle there, but I did expect that this impulse day down, this is an unusually wide-ranging day. It's an impulse move here. The expectation is we are likely to take this low out. So really, I was looking for that 43.35 area to be taken out yesterday, and then was looking for a bounce back to 72 and 78. So I'm looking for the market to pull back and then push to 72, 78, finish somewhere in the middle. Here's what we got. Yes, I'm fired up this morning. Here's what we got. Let's clean this chart up here a little bit. So we open up, we put in an opening swing at 53.25, opening swing low, opening swing high at 61.25. We take out the opening swing high by a little bit, come back in, take out the opening swing low. So immediately we know that this is an open auction in range, trading both sides, likely to be noisy. And then we cannot push down into the prior close and settlement. We cannot get to the prior close and settlement, which is down here, which is against the prior day's point of control. That is a magnet area. We expect the market to test that as it comes close, and we get this explosive move higher, which to me was very difficult to jump on. And then we go sideways for a while. Let's turn the lines back on. We go sideways for a while, and we just sit sideways for a good part of the session. Really difficult to trade that chop. We know that we are above the RTH VWAP, RTH mid, full session VWAP. We're above the open. We're above the opening swing. So we know that we need to lean long. We need to lean long. But look at leaning long. What you had yesterday, leaning long against key areas, is a low, higher low, trigger long, catch the move, get a scale out, turns around, back to scratch to stop. Very tough trading this area yesterday. And then we see this move that occurs right here, this move lower, which then creates an opportunity for a short against the 64 or so on the pullback to the full session in RTH VWAP for a continuation lower. And then at that point, I'm looking for a neutral day. So it broke the IB high. So we broke the IB stat's done. And now it looks like we're likely to go neutral. If you're a member of Convergent Trading, you would have seen me comment on this on the Head Trader channel as it was falling, that we are likely to break the IB low, and we are likely to push into settlement around 43, 43.50 or so. And it got to 44 and a quarter. 44 and a quarter, we would expect it to pull back a little bit, continue down, and then at least tag this price and get the prior day's point of control. Nope, no cigar for you. Cuts right across the day references all the way back to the IB high, settles here for a while, and then cuts all the way across, again pokes that IB low on the close, and then sits sideways. Really tough trade yesterday because of it. And what we had is a market that was whipsawing everybody. I don't care if you're an algo or whatever. There were all kinds of signals yesterday and lots of opportunity for stops. However, you would notice the delta is going straight down throughout the session. So there's more activity on the bid, aggressors hitting the bid or selling the bid than lifting the offer. And to me, yesterday was a very undecided market and a very tough trade. So it wouldn't be surprised if folks hit their limits yesterday. So yesterday's, you could see here, lots and lots and lots of noise throughout the session, even in the overnight session. So after the big selling day, we had this impulse down, pull back to the RTH mid, and then we closed near lows on that impulse day. So we never actually retested this low at 34.75, 35 to be rounded. And then yesterday before the open, we ran all the way up to 78.75, pulled back to 45, ran all the way back up in the RTH to 76.50, pulled all the way back to 44, ran all the way up to 75, pulled all the way back to 45. So a very whippy market. And then when we reopen in the Asian session, we start to take an upward skew, and we ran it all the way up to 89. And now we're pulling all the way back to yesterday's open at 58. Okay. So really whippy market, and it's continuing. It's going to continue to do so today. So today's the kind of day where you don't want to commit too much to a trade. You don't want to violate your stops. It is likely to be whipsaw coming into today. There's a lot of indecision on the market. However, if you look at this channel here, it is definitely having a hard time taking out the key swing lows on a revisit. So it's attempting to one time frame up inside of the range that we put in on Tuesday on that selling day. So we broke that narrow triangle up top above 4,400. We broke down and we had an impulse day down, which was expected, big move down. And then we have been trading inside of that. So we have a market that's yet again coiling. And we're coiling against 4350, which is the MC point of control. This is where this black line comes from right here, 4350. Lots of volume at that level. And we're holding that level. And so as long as we continue to get below 4350 and then bounce off, get below 350 and bounce off, we are likely to start crawling higher and squeezing shorts again. Okay, so that's what that looks like. Really, there's not much more I can offer today in terms of prep. If we look at what we've got here in a clean RTH only chart, this is what we have. The big picture shows that we are continuing to look aggressively lower, but at the same time, once we did push aggressively lower, we started to create a channel going up, and we've broken this channel. So to me, and you can see Tuesday and Wednesday, you can see Wednesday inside of Tuesday. Wednesday moved all the way to the mid of Tuesday around the 76 area and has come off and finished lower, finished around the 50. We closed around the 50 yesterday, 43.50. So it's not really able to motivate. These prices are not truly motivating, buyers to step up their game. So we're not seeing the typical bargain we see down here to raise the auction higher. So this is likely to be a very choppy day. So be prepared for that. Come in expecting that. That's what we're looking for. So we're going to look into a quick look at the overview of, well, let's see. Quick overview of the bigger picture. These are all 8-hour charts. We're looking at 8-hour charts. Each chart has an overlay of a monthly VWAP. So at the beginning of the month, we look for where the VWAP is and how the market has responded to that VWAP. And today is the last day of the month, the last day of September. We're starting Q4 tomorrow. And to look at how things are versus the VWAP, and you can see in gold here, there's pretty good separation between the VWAP and some of these products. The bonds, this thing's already shifting. The bonds, there's a lot of separation between the VWAP and the current price. Same thing. Not sure why the VWAP's adjusting itself. It's the last day of the month. It's doing it too early. But there's a lot of separation in the macro fundamental products between the VWAP, where balance-ish, VWAP acts as almost as a proxy balance based on volume. These things are really moving away from their VWAPs, and to me, that continues to weigh on equities. So for every push lower, I'm expecting that there's an interest in buying. So we still have bargain shoppers. Techs have taken a bit of a beating, expecting bargain shoppers to continue to show up, and we're likely to see that translate going forward. So what are we looking for today? Look, the levels haven't really changed. We did put in a couple of shelves here at 65. So 65 to me is quite important today. That's not the right color. That's more of a limeish green. And let's expand this a little bit. One Vol Sigma up and down, good. So 65 to me continues to be At battleground, that's where today's point of control is. It was where yesterday's overnight point of control was, 65, and then 75 above there, 80. Actually, there's a level here at 85. There was a battle at 85. We went to 88 overnight. 95. Don't ask me why. It's every 10 points. That's not intended. It's not an algorithm that figures 10 points as a distance. Those 5 levels have seen a lot of action lately, have seen a lot of icebergs, and those become key areas. I'm not going to draw a map of how I expect price to move today, and there's just no point to it. So to me, we just have to be aware of what our key areas are. And so 4750 is the big number below. This mid-century figure is the MC point of control still, and it is the line in the sand in terms of balance. The line in the sand in terms of over under in today's session is the 75, because yesterday's high was 76. The overnight low volume node was around the 76 area, and then the pullback high from the selling day right here was around 73. So this is the line in the sand today, 75. So as long as we stay below the 75, I would expect 50. If we push above the 75 and stay bid, I would be looking for an out at 85 and then targeting 95. That would be my plan for today. I'm not going to draw the lines. It's going to be noisy. There's no point in me drawing lines. It's a fake exercise in this kind of environment. I hope you're gaining something by watching this. You're probably noticing, if you're new, that I'm doing the exact same thing day in, day out. This is what you should be doing if you're moving towards trading professionally and profitably. In my opinion, you've got to follow a process, and that process has an edge built into it. And as long as you follow the process and keep your risk in check, then we expect the profits to take care of themselves, and we expect the risk to be muted so that you can continue to sample the market or flip a coin with every trade. So follow the process, keep your map in play. So some traders, what they do is they print out a longer term map, 60 minutes, 30 minutes, or whatever, if you're day trading, and they just write their key mapping levels on there. Strongly suggest that exercise. The other exercise I strongly suggest is, once the day is over, go back to your trigger chart and play it bar by bar, bar by bar, and see how the market responded to those mapped lines. Trade from mapped line to mapped line. I call those stock zones. Some people call them decision zones, support resistance zones, whatever. These lines are based on volume profiling as well as price action, and some statistical constraints, historical probabilities. But however you do it, it doesn't matter. Even if it's floor trade or pivots, put those on a map, trade when the market tests those, and then go back and play the market back. And within weeks, I expect that you will start seeing how things are responding to your plan, and if you truly have an edge, which builds your confidence, and therefore you start to execute a little bit better without too much overthinking. This is a hard part for traders. Good luck, and I'll catch you tomorrow morning. Take care.